Have you ever wondered why some people get rich from real estate while others struggle to even break even? Today, we're diving into the hidden truths of property investment that most people won't tell you. Stick around, because what you'll learn could change the way you think about real estate forever. Is real estate really as simple as buying low and selling high, or is there a deeper strategy at play that could make or break your investment? If you've ever thought about jumping into property but didn't know where to start, this video is for you. What if you could unlock the secret to smarter property investments? Let's kick things off by addressing the first big question. Why do some investors make huge returns while others lose everything? Well, the secret isn't always about the property itself. It's about location. But here's the thing, are you choosing your locations based on hype or on cold, hard facts? Let me ask you, how do you decide where to invest? Is it just about popular areas, or is there something more? You see, the most successful investors focus on areas that are undervalued but set for growth. And how do you spot these areas? One of the best-kept secrets is the up-and-coming neighborhoods. They might not be glamorous now, but they have the potential to grow. But how do you find them before everyone else catches on? So, if location is so important, how do you tell if an area is about to boom? Do you wait for the news headlines? Or do you dig deeper into things like infrastructure, transport links, or new businesses setting up shop? What would you do? Here's the next big tip: timing is everything. But what does good timing look like? It's not about buying when everyone else is, it's about buying before everyone else does. And guess what? Real estate cycles are predictable. The trick is recognizing the early signs of change. Have you ever heard of the term property cycle? It's basically the rhythm of the market. Prices go up, they peak, then they correct. But when is the right time to jump in? Right before a market correction, if you're in the know. So how do you know when this is? Let's talk about rental yields. This is one of the most important factors in making a smart investment. But here's the catch. Are you focusing on gross rental yields or net rental yields? You'd be surprised how many investors get this wrong. Gross yield is the big number you see online, but net yield is what really matters because it takes into account expenses like maintenance, taxes, and property management fees. Why? So which number are you really looking at when you analyze a property? If rental yield is so important, are you factoring in the costs that come with being a property owner? If not, you might be setting yourself up for disappointment. What would you do differently now that you know this? Here's the hard truth in real estate. It's not about quick profits. It's about the long game. Property values don't skyrocket overnight, but over time they can deliver incredible returns. The key is not to panic during short-term market dips. How would you stay calm if the market dropped 5% next year? Would you hold your ground or sell off? The most successful investors know this. Patience is the name of the game. Buy, hold, and wait for the market to work its magic. But how long is long-term enough for you? So let me ask you one final question. Are you ready to take the leap into real estate investing? With the right knowledge, strategy, and timing, you can absolutely make it work. But the question is, are you ready to put in the work? Because in the end, success in real estate isn't about luck. It's about being smart and prepared. Thanks for watching. Don't forget to like, subscribe, and leave a comment below. I want to hear your thoughts on this. What would you do first in your real estate journey? Let's talk.